YouTube, what it do? It is your boy Young Soros here, back with another video. And in today's video, the stock market went absolutely ballistic today. The volatility was insane, the data was insane, the bonds, dollar, even the Japanese, and it was a crazy day. I want to give a breakdown of what happened today, and I want to tell you guys, just we're in the heat of peak volatility. The same thing happened last year, so you gotta stay on your toes. Can you guys tell that I'm excited? I'm excited because it was a wild day in the markets, and you still have 2 more days of data, not to mention CPI and all that. So let's jump right into it. Start off with the bonds. The bonds look hideous. They're atrocious. If you take a look at this chart, this is bad. The bonds have been selling off, and they have been going into no man's land for a while. They have just been absolutely getting demolished. They have been getting clapped. It has been a pretty bad past couple months for the bonds, if I'm honest with you guys. Like, this is an extreme sell-off. Y'all thought last year it was pretty bad how fast the bonds were selling off, but if you take a look at this year, we were trading in a range. I guess this range was just keen on breaking, and I told you guys, once the bonds broke 100, they go to 95. Once they broke 90, they go all the way to 85, and look where it touched. It touched 85. So can we go lower? Yes, we most definitely can. If the data comes out and CPI justifies it, if unemployment justifies it, if all these data sets justifies, you know, the bonds going lower and inflation sticking or the rates staying high, they will stay high. The bonds don't care, and it is just it is an extraordinary thing to witness, because not only that, the stock market couldn't ignore the bonds anymore. They couldn't ignore the bonds selling off, and as you can see, it took a huge beating intraday. As the data set came out, it came out way hotter than expected. The jobs openings, which it came out way hotter than expected, meaning bonds, dollar, everything started to break, and you can see where everything broke. You can see where the dollar popped. It popped over here. You can see where the SPY sold off. You can see where the bonds also started to sell off, all when this data came out. What was this data? It was the jobs numbers. It was the jobs numbers. It was hotter than expected. The market did not like that. The bonds did not like that. But you know who loved it? The dollar. The dollar absolutely loved it, and it rallied hard off of this. Now, what's interesting about today, what happened, you saw tech actually sell off for the first time in a long time. The NASDAQ on the day was down 2%. Last time the NASDAQ was down 2%, it was a while ago. You have to go all the way back to around March to get those 2% down days. But to see the NASDAQ sell off that hard was really surprising. Especially because, you know, the NASDAQ is being carried by only 7 stocks, and them 7 stocks seem to be invincible, and whatever is thrown their way, they can seem to eat those bullets. But they couldn't eat the bullets today. Everything sold off. Everything caught a fade. It didn't matter whether you were tech, energy, or it doesn't matter. Real estate, it didn't matter. You were catching a fade from the bonds and from the dollar. Now, what's interesting about the dollar, I want to speak on this for a little bit. If you take a look at this chart, you see that the dollar instantly pops and then instantly drops and goes all the way, you know, starts breaking down a little bit. Why is that? Well, if you take a look at the Japanese yen, you notice something very interesting. As it starts to hit the lows, as the data comes out, the Bank of Japan intervened today, guys. Their currency was on the brink of collapse, and the Bank of Japan intervened, and they had to step in, or things were going to get really spooky really quickly. And it was all because of the dollar. The stronger the dollar gets, the more the the currency start to weaken, that is going to be a bad effect on the stock market and the bond market, and that is what is keeping this volatility alive and ramping it up a little bit. And then you have the Bank of Japan, also getting in the mix too by intervening. They even commented today and they said no comment, but we already know that it's the Bank of Japan. Currencies don't move like this, and if they do move like this without government intervention, you want to be on the lookout. So, with that being said, though, you got to keep in mind the Bank of Japan isn't going to intervene that often. And what's interesting about it is that even though they intervene, it couldn't hold this 1% move up here. It more so held this range up here. And as you start to notice, it is starting to fall back down and even, go back to where it came. So it may reach down here. And what's this? What is this all saying? What is this all saying, young Soros? Well, this is saying to us the dollar is way stronger than we think. If the currencies start to break down any further, you can see the dollar hit 31 and 32. Once it starts hitting those levels, it starts decimating everything. The stock market isn't even the least of our problems once the dollar starts breaking out beyond these levels we've seen. It is more so the currencies it starts to affect next. And what's interesting about this is that all the currencies, they haven't been going too crazy this year, and the dollar is at the same levels as it was last year, where the currencies were a lot weaker. So you got to keep that in mind. There is a lot going on. Volatility is insane. You have the bonds, you have the bond dollar wrecking ball effect going on. The dollar and the bonds are feeding off each other, and the more this keeps happening, the more you're going to watch the bonds start selling off, the more you're going to watch the dollar pop. And even today, when the Japanese intervened, the dollar was still up on the day, which is very, very, very terrifying to see. The dollar is still strong. So you got to keep that all in mind. We got to see what the data has for us tomorrow, as if the data comes out bad again and it signals more inflation, higher rates, it could get ugly pretty quickly. We touched 420, but let's zoom out of the charts really quickly. We touched 420. We could easily go back all the way down to 400. Am I saying we're gonna hit that in the next couple weeks? No. What I'm saying is that if it keeps breaking down and you get no signs of relief, one or two things are gonna happen. Either it's gonna keep breaking down and the moves are gonna get bigger and bigger, or the market is going to have an extreme reverse to the upside. So you gotta be careful. We are in one of those moments where it's like you want to pick which way you're going. This isn't the time to be on the fence either way, because the market can move pretty quickly, but you still want to see what the data is going to show us. Is the CPI going to come out hotter than expected, or is it going to come out cooler than expected? Depending on the CPI and the next couple of data sets that come out, it is going to really shape what is going to happen going into 2024. And you got to keep in mind, the data sets aren't the only things driving this either. You have earnings, and I don't know about you guys, I'm not too excited about earnings when I'm seeing the dollar at the same levels it was last year. And this is where the dollar wrecking ball was starting to occur, and it was starting to hurt corporate profits. And if the dollar wrecking ball keeps continuing, you have the currency start to sell off, you have the bonds just absolutely getting wrecked. You may not see an end of a year rally. Now, I still believe personally that an end of the year rally is going to come, and this is just you're just continuing what you left off with from the highs of this year. Now, with that being said, though, there is still a lot more room to go. You still have a lot more headwinds, and a government shutdown, avoiding a government shutdown, that was good, but now you have a different problem on your hands. The bonds are freaking out. You have the dollar absolutely going ape shit, and then you have everything else. So you got to keep that in mind, guys. Stay on your toes. It is going to get extremely, extremely volatile. A 2% move on the NASDAQ and a 1.5 move on the SPY. Absolutely wicked to see. And I have something interesting to show you guys. I have something very, very interesting to show you guys. The Dow Jones, it is red on the year, guys. So it is very wicked out here. I don't want to be the one to say this, but we are still in a bear market. You may see the SPY and the NASDAQ almost hitting all-time highs, but the Dow Jones and the Russell 2000, the Dow Jones is red on the year. And those are where most of the stronger stocks lie. Those are where most of the stable stocks lie. So if you mean to tell me the Dow Jones is red on the year, we are still in a bear market. The only reason it doesn't look like it is because the market is being distorted by, again, 7 companies. The market is getting distorted. And if you take a look at the SPY equal weight, go look at the SPY equal weight, that is negative as well. So it is really, really hard to tell what exactly is happening in a sense. But if you can just look beyond the smoke and mirror, if you can look beyond the smoke and mirrors, you can easily tell that, okay, this is just a bear market rally or a more extended bear market rally, because the way the stock market just ripped up and just exploded. But you have the Dow Jones red on the year. That should tell you something pretty interesting, and that is where you start to understand, okay, this isn't a healthy market, or this is just another market bounce. And that's why I feel like there's one more bounce in the table. But going into 2024, that is where I feel the real carnage starts to happen, when the yield curve starts uninverting, and the yield curve has already begun uninverting. That is where the carnage starts to happen. That is where, if Jerome Powell decides to keep this strongman attitude, and I hope he does, where he keeps the rates higher, is the stock market going to freak out? Another thing is, if the stock market is going to freak out, is it going to mess with Jerome Powell? Are they going to bully Jerome Powell and say, listen, you are not going to raise rates any higher than they need to be? I don't know. I couldn't tell you. One thing I can tell you, though, is that there is a rate cut coming really, really soon. I'm predicting in the next 6 to 12 months, a rate cut will be coming very, very soon. And you may think to yourself that is a good thing, but no. I think that is a terrible, terrible thing if Jerome Powell decides to cut rates sooner than expected. Now, is he going to cut rates in 2024? I hope not, but I am 80% sure that he will crack. Something will break, because this market, this economy is not. It's being held. It's being held by glue. It's not the strongest glue in the world. It's being held by really, really cheap glue. And what is this glue? 0% interest rates for almost a decade. Like, eventually you gotta come back to normality. And right now, in the stock market world, the real estate world, the economic world, normality is not the common thing right now. Things are still extremely elevated. You still have an extremely elevated level of inflation. Go look at China's economy right now. They're ahead of us, and look at their economy. It is jumped off a cliff. So what does that say about the US and the other economies in the world? It is not a good sign to tell. China is one of the biggest economies in the world, and if they're struggling really, really bad, that is not a good sign for the US. So let us get into the plays. I still have the same plays from yesterday. I'm still holding on to those. I jumped into a SPY daily put. I got $80 on these. They ran all the way up to $3, as the market started to sell off. So I got those. I took an 80 buck profit, not too bad, but that is the second day in a row where I had a profit. I took it too early, and the contracts kept running. So hopefully tomorrow I can trade them and see what I can do with those, and maybe I can hold them for longer. But I like the profit that I took. Like I said, I like the profits, but I definitely took it off a little bit too early. There was still a lot of meat on the bone, as you can see. Oh, I shorted. Oh, I'm still up on these contracts. Got up a little bit more today. In the dollar calls, what's surprising about the dollar calls is that I'm not up too much on these, even though these were in the money at one point. The contracts, the premiums, they haven't been moving too crazy, but what I'm hoping is that the currencies will start to break and bend against the dollar, and that will push the dollar as it has been going on this extreme winning streak. Now, as for XLB, again, coming off of where we started yesterday, it was a decent gain, and it just stayed around the same price. Little sell-off today, had a huge bounce in the morning, and then sold it all off. And for my forward calls, I'm still holding these, but these are pretty much dead. I had these at the beginning of the year in January, hoping I could, make a quick flip, do something with those. So I mean, these are dead. I don't want to talk about these. I still believe that the bonds can go lower. This may look. What do I want to say? This may contradict what I'm saying, but yes, in January I did want to short the bonds, but I also wanted to have these calls in case something crazy happened like they did in March, and I was wrong, and I'll take that loss gladly. So that is one of the things about trading. You got to take your losses and keep your chin up and keep it held high. As you can see for forward, we're actually down on those. We're not down too much. They really haven't moved, so I'm expecting the forwards to start moving once all this volatility starts to pass. So that is it, guys. That is the video. I hope you guys like the video. Make sure you drop a like and subscribe. I will talk to you all later. Young Soros out.